All right. Hopefully people join soon.
Yeah. Charity said that she had a few people. Hopefully they'll hop on.
Nice. And I know emails went out too
Hmm.
and everything. I saw people signed up for it.
Yeah. We'll wait till 5:45, and if nobody shows, then we will call it. That's the 15-minute professor rule.
Yeah. I know like Anne Marie was coming and I think Juliet signed up for it too. Oh, Juliet. Hello. She's here. Oh, we got two more people here. Yeah, Anna Marie's. Yep, we got three people.
Cool.
Hello, everyone. I forgot that I have it where you don't see everyone.
That's okay. I minimize the screen so it's right by my camera to make sure that I'm always looking at the camera. Otherwise, I would be like looking at my other screens. So this is a cheat way for me to make sure I am still looking engaged.
Nice. All right.
Had to learn from somebody. One time someone said, Vincent, how many screens do you have? I'm like, two, three, maybe. And so he's like, I can give you a tip. If you leave your screen that you need to look at, minimize it, but put it right underneath the camera, then you won't have to look at these other stuff and you can just duplicate the two. And you'll see the big ones at the corner of your eyes in case you miss anything. I'm like, that's a great tip.
And because it looks like you're looking at the video. Yeah,
Yeah, yeah. I'm always facing forward.
nice. Super good tip.
Is it Juliet or how do you say that? Juliet?
Juliet.
Gillette. Okay.
Yeah.
How's your day going today, Gillette?
Ah, Charity's on too.
Yeah. Yeah. Perfect spot on cameras. I'm telling you, it's tricky. They now made these cameras that you could dangle to like the middle of your screen, and it has minimal obstruction on the presentation. So you're looking at the camera like this all the time. But for me, I find that a little bit distracting. So I just stay with the traditional cameras and use this trick.
Gotcha. Well, we do have five people logged in right now. You can start anytime.
Does those five include us two as well? Okay.
Oh no, outside of us.
Outside of us. Okay. Okay. Well, I think that it's 5 minutes, 5:35 now. I think we can go ahead and get started, and then once people can come on as they like and join us through the process. So welcome everyone. I know that with Zoom, I don't use Zoom, so I'm not very comfortable or very good with the features of Zoom. But if you don't mind, could you all type in your name in the chat and where you're joining from so I can see um, who's all here today. Local is good. Local is good. All right. So I appreciate you all being here. This is part of the learning series that Laura has been gracious enough to put together for us. And I'm very happy to be able to share what we do. most of you, who is a realtor in this on this call right now? And
And Charity.
so we got two realtors, okay? And Marie and Gillette and Masaru, are you, what do you guys do? Very cool. I'm gonna try to make it as okay, very good. As interactive as I can, since it's a small group. I love smaller groups, so that way we can ask questions. Oh wow, that's exciting. I can't even pronounce that. Ophthalmolog. So my name is Vincent Cha. I am a mortgage lender with Key Savings Bank. Um, and we're going to be talking about some of the processes here. Um, most of you may be aware of how to start the process, and then it eventually breaks off. We have two realtors in here, and that's where the branch breaks off into, hey, who do I work with when it comes to the financial side, and who do I work with when it comes to the property side. So we got Charity and we got Laura in the chat here, and they can help answer questions. It's interactive, so as your questions come up, please feel free to type it in the chat log, and I will be happy to address them as we move along. The different topics, if you think of it then, ask it then, so that we can talk about it a little bit more, expand on it. If you have a question, most likely others will have it as well. So as we move along, we'll be able to just, a brief little introduction on Key Savings Bank. Key Savings Bank has been around since 1920, and I know that we are in central Wisconsin. So our main offices are in Rome, which, if you don't know what that is, or Wisconsin Rapids. There's two locations there. We are looking to expand and have been expanding in the Midwest, Wisconsin, Minnesota, Illinois, bringing lenders in from different regions of the area. So, as a local lender, you work with people that you can see face to face. And then you can call us too. I mean, you can call any lender. I have just seen sometimes with big box lenders that there may be a disconnect in communication. So as a first-time home buyer, you want to work with your realtor as to see, hey, which one of these lenders in this area that you have good communication with, so that way you as a buyer don't get dropped in that process. Little about me as well. I have lived in Madison for the last 20 years. I started my career in banking at 16. I was a part-time teller while I was in high school, working my way up the corporate ladder or banking environment, moved to personal banker, mortgage lending, and then eventually bank manager. So I've had most employees I've ever had was 22 employees. I don't think I ever want to go back to that space. It was fun, but it was a good challenge for me. So one of the first questions I like to ask the participants is, what makes a house a home? Because we're thinking about buying a property. It's a physical space that we reside in. So what makes it a home? And that's some of the talking points that I want you to think about as we move through these slides. Why, where, when, how, who, all of that. Because as a lender, it's important for me to understand your situation so that one, I can guide you properly. Two, give you guidance that's going to help you make a good investment in a property and not put you in a spot where you're not going to be able to afford that home 1 year in, 2 year in, 3 year in. We want to make sure that we're doing the right thing for you as the consumer. Is some of the things that we think about when we look at a home, is it because you want to own a little piece of the world, your own little corner? Is it about the people that live under its roof? Is it about the memories that you will make? And so that's what we're looking at, is what makes a house a home for you. Here are the topics that we will be covering today. Hopefully we'll be able to get through this in the next 30 to 45 minutes, and feel free to ask questions along the way. First steps, what to consider, how to select a lender, pre-qualify versus pre-approval, what not to do, and does seasoning mean, what does seasoning mean, and which program is right for you. So we start to think about determining if buying a home is the right uh, the right space for you right now. Why are you looking for a home? Is it the right time? Thinking about the property itself is considering what to buy in a home is what, who, why, where, and how. Is it a want or is it a need? Does it align with your current financial situation and goals? Who do you need to talk to first about getting started? Are you a first-time home buyer? I have not made these slides public, but I'm happy to send some of my notes to you. Yep, absolutely. Sorry. All right, selecting a lender. These are very general information for potential buyers, or if you're thinking about buying a home. Why is selecting a lender important? Things to consider. We talked a little bit about this. Is the lender local? Does the loan officer work for a bank, or is he or she a broker? Will the loan be serviced by the local bank or sold to a servicing company after you close on the loan? And do they have loan programs to meet your needs? These are all very good topics or points for you to consider when you're looking for a loan officer. Loan officers that work for banks, they are more local, and perhaps they are in your communities. Where brokers, they may not be someone that is local, or they could be local, but they will sell you loan to different financial institutions or investment firms that does those types of mortgages. All right, this is the first piece that's going to have a lot of content for you. What does it mean to get pre-qualified versus pre-approval? We hear this term a lot where they say, hey, get pre-qualified, answer 5 questions. As a lender, I don't like to pre-qualify because pre-qualify doesn't tell you how serious the applicant is or how well qualified they are to purchase the home despite the name being pre-qualified. It's just some information that you get from the buyer to see on a high level if they are qualified. A pre-approval is most oftentimes my process because I want to make sure if I'm saying, hey, Charity, you can go buy this house for X number, this is your budget, that I want to be solid in that conversation to allow her to make a good decision based on the information I'm giving her for her family. So do you ever see those ads or commercials that says pre-qualify in minutes? Why do you think banks advertise a quick pre-qualification process? They want to get you in the door. And then they want you to submit an application. But what doesn't happen here in this process is they haven't asked you what kind of a loan are you looking for, if we can even meet that requirement that you have. So it doesn't mean much for buyers who may not be acutely aware of their own financials. Answering 3 questions to get pre-qualified seems seamless and convenient, but it does not give you what you're looking for. Many sellers, and frankly, even your realtor, Laura and Charity might be able to attest to this, that they may show a buyer a couple homes, but unless you can get a pre-approval letter showing you many more homes beyond that is going to potentially be a waste of your time as a buyer and their time because you really don't know what your purchasing power is or where you need to stay or what type of property you're looking for. So pre-approval is what I would recommend. Masaru, I know that you're saving to buy a house. This is going to be something you want to look at, is making sure that all the numbers make sense. Comes down to, um, you know, credit pull, how your income is, your employment, how your debt to income ratio factors into the home price and all that good stuff. And then the last piece I want to ask you is, have you ever heard of someone purchasing a home and at the last minute get denied a loan? Last week or 3 days before closing, the lender will pull the financing from that deal. And this happens because of a variety of reasons, and we'll explore that on the next slides. Any questions so far? Okay. So as we look at what not to do between the time between accepted offer and closing. Now I'll put this out there because I may be stepping on realtors' toes, but I do believe that a realtor's least favorite thing is when a loan falls through a week before closing, or worse yet, 3 days before closing.
That's the worst thing ever.
As
Brings
a
so much
lender,
anxiety for all parties.
yep, we pull credit usually a week before closing, or when we send out the closing disclosure, which is 3 days minimum before closing. So at that time, we repull credit, and um, if you have done something that you shouldn't have, then the loan could fall through. And here are some of the things you do not want to do. You don't want to buy or lease a vehicle or anything with a motor, anything that costs money that is going to be more than a couple $100 where you can just say, hey, here is a couple $100, I want to buy that. You don't want to do that. You don't want to move your assets around, don't want to buy furniture or appliances, because generally these items are costly or large dollar amounts that, one, could take away funds from closing for you, and two, they will say, hey, get 0% financing for 9 months. You're like, that's a great deal. You do that, but then now you have a debt that has been added to your credit that could potentially send the deal over the maximum allowed requirements. Don't change jobs. Job and employment is extremely important when it comes to lending. And don't apply for new credit. Don't co-sign any loans. Don't change banks. Don't pack up important documents such as taxes, potential deeds, anything that your lender, depending on what you're trying to do, that would help you get to your goal. So these are do not do's, and they are extremely important. Any questions so far? So if that is your pattern, Saru, you're fine. If the pattern is that you purchase items and then you pay it off, you're fine because the lender can see that. It is when, let's say that you have a credit card and you put on $2,000 through the credit card. Well, if that credit card was at a zero balance before and that zero balance did not impact your debt to income ratio, or we call it DTI, and that DTI is in line with the program you're trying to get into, you'll be okay. But if they exceed some of those program limitations, then the loan could get denied or the loan could get pulled. Um, in terms of avoiding things, the safest bet is to say, hey, we only have 30 days to 45 days from acceptance to closing. If I could do nothing that would change my financial situation at that time, I would do it. If you need to do anything after the closing, that's on you. But leading up to the closing, you want to keep everything as still as possible so it doesn't scare the lender off. Remember, it's potentially the biggest purchase you will make in your lifetime. And it's also a lot of money that the lender is going to trust you with the purchase of a home. So they can get pretty like, hey, what's going on here? And ask a lot more questions. So I would say keep it steady if you can. So this is what to do in between accept the offer and closing. So documents and documents any deposits. If you get a large deposit from, let's say, your mom or someone's paying you back for a loan, right? You want to document it. What was this for? Banks like to see that, and we'll talk about seasoning next. Is banks like to see funds in your name for over 2 months. Some banks or programs require 3 months of seasoning. That means 3 full statements where they can see that value of dollars sitting there in your name. If you're lucky, you might find some that only requires 30 days. Those are far and few in between because there are some regulations, and then there's bank overlays that go on top of that that makes these requirements sometimes non-negotiable. If you are receiving gifts from family members, make sure your lender is aware. Mom is giving you 10 grand as a down payment. Make sure you tell me, Vincent, mom's giving me $10,000 towards my down payment. It's coming to my account on this day. I will ask you, hey, I'm gonna need mom to give me 2 months worth of statements that shows these funds were in her name before she transferred it to you. That's how these work, is we have to follow the money trail to make sure that maybe you didn't get these funds from some Nigerian prince that says buy this house and then he'll send you a couple $1 million. And keep your lender updated. The lender's job isn't to prevent you from getting the loan. The lender's job is to help you get the loan, but the lender is also the person between the underwriter and the loan. So the more your lender has that they can use to help you, the more they can fight off a decision that goes to no. So hopefully that helps. Then we talk about seasoning. We just touched base on this. The bank requires that you will have funds for the mortgage closing to be seasoned. Most oftentimes, 2 to 3 months are very typical. So a lot of times if you get gifted funds, which we'll talk about next as well, there is a letter requirement, which means that you have to know where those are coming from, and the lender has to know where those are coming from. Seasoning is exactly that, is that we have to verify the funds have been placed in a financial institution and it has been there for X number of days. The money laundering is what this is mainly geared towards, is to make sure that we're not just laundering funds to buy properties with. And there are some other criteria too, but the majority or the most important thing is making sure that you know those funds have been sitting in an account somewhere. Laura and Charity can also attest to this, maybe not so much anymore, but back in the days, there's mattress money. Or I've had a couple situations where I'm like, where's your down payment coming from? And the customer brings me a bag full of cash. And I say, I cannot use that because it has not been seasoned. And the customer goes, is this cash not good? I'm like, it's good. We just have to make sure that it sits there in your name for X number of days, then we can use it. So it's just these pre-education that most people don't get on the front end. And we want to prevent it so that way your process, your home buying process, goes as smoothly as possible with your realtor and with your lender. Gift funds. We talk about receiving money from your parents, from family members, potentially friends. In any case, there are limitations as to how those funds can be received. Give you an example. If you look on your screen, there's a conventional loan. Funds must come from a relative, fiance, or domestic partner. What if my friend wanted to gift me some funds? I can't use it for conventional loans. In addition, I must also contribute 5% of my own funds if the loan exceeds what we call the jumbo amount, or if the gift is more than 20% of the home price. So if my home price is 100,000, and my friend wants to gift me 20%, they can't even do that on a conventional loan because it doesn't allow it from a friend. But if my mom gave me 20,000 towards a down payment, I must come up with 5% of my own money that can be sourced and traced through my accounts and my finances that they were mine for the last 2 to 3 months. Hopefully that makes sense. We'll stop there for a minute. Any questions so far? All right. So we talked a lot about general stuff so far, just very general, basic, what to know, important things for you as a buyer, to make sure that your process goes smoothly. But I guarantee you that if you're here and if your realtor is Laura or Charity, you're gonna have a smooth process because these ladies already know what they're doing from the get-go, so you won't have any issues there. Um, Transition to loans. So we have talked about, hey, how do you get there? You know, what are some things to look for? Do you save? Now we talk about how are you going to save? And I'm assuming that by the time you get to this step that you would have some you know, a little bit saved up for down payment. And then there are some loan programs that does not require any kind of down payment, which is wonderful. It helps people get into homes. It helps them start their lives. But each loan program is going to have its pros and cons. And what that means is that it's important to find a lender that is going to find the right program for you and your situation. We don't think that that's such a hard process, but it is so delicate because um, as lenders, sometimes they will just write a loan so that they can get paid and they move on. The real reason behind having a lender versus going online and doing it with Rocket Mortgage is so that you can talk through these processes. You will know what are these options. And if the lender says, hey, I think this program is good for you, but this other one is also just as equally good, and they'll explain the pros and cons, and then you get to choose. Whereas if you do it on your own and you select a loan program without consulting with a lender and just get through the processing, you may end up with a loan program that may not be in your best interest. So what that means is that we look at mortgage loans. What kind of loans? These are the general four buckets that we fall into when it comes to mortgage loans. Which loans is right for you? Conventional loans, FHA, USDA, or VA loans. There are requirements within each bucket that you have to meet. However, as you can see, there are down payment requirements within the first two buckets, conventional and FHA. There's a 95%, which means a 5% must come from you as a down payment on the conventional loan. FHA loans, generally it's 3.5%, 4.5%, but there are more flexibility here because on an FHA loan, there are programs that help subsidize or at least help you with that down payment on an FHA. USDA designed to move people out into the suburbs so that way um, cities can continue to expand. There are requirements here, but these loans tend to be pretty good for individuals who want to move a little bit further from town. And the VA loans, obviously, for our veterans. So these four buckets are what you're going to see across the board, no matter which bank you go to, they're going to have at least three of these four programs offered. And they're generally the same. These are secondary. They vary in rates, they vary in maybe closing, but for the most part, they're going to be pretty similar across the board. Just some more ideas of what these loans offer in terms of fees, down payments, and insurance. All that is part of understanding your loan options. Funding fees such as VA loans, you're going to have 2 to 3% waived for disabled veterans. USDA loans, you're going to have 1% upfront and an annual fee of 35 points. These are the costs to use these programs because as you think about where these monies are coming from, they're coming from federal agencies, they're coming from banks who are looking to make interest on loans. And so you're going to have different fees depending on what kind of loan you go for. Another product overview, and this is the last slide before we get into very specifics. some of the basic requirements. Masaru, I know that you may be looking at a home. This might be a slide that's important to you. So these are going to be tables that maybe you want to look at, and I'll send it to you too if you like. So Charity asked the question, what are the first steps buyers should do to start the loan process and also have a positive loan experience? I would say if you are truly ready to purchase a home and you're like, hey, I'm decided I would like to look in this area. I have this much for down payment. I want to see who is going to be a good fit for me as a lender. Um, as a lender, I'm okay if you go and interview with 2 lenders and say, don't pull credit yet. I just want to find out what kind of programs you have. And if this is my situation, how would you advise me? You're going to take time away from that lender that they're not getting compensated for. And that's going to show you how they're going to take care of you in that process. So to start the loan process, you're going to need to apply for an application or to get pre-approval. And that pre-approval can come in terms of talking with somebody or doing it yourself online on the company's website. But the first thing to do, I would recommend, is interview with 1 or 2 lenders and say, I'm in the process of selecting a lender. I'd like to know what kind of programs you offer and what your process is for me as the customer so that I can understand your expectations. Great question, Charity. All right, that is the end of general loan programs and whatnot. Any other questions before we get into more specific? Absolutely. So I love it when a realtor has a checklist for their buyers that says, hey, here's what you're going to need to apply for a loan. That is the last 2 months of your pay stubs. That is your most recent or 2 months of bank statements that shows the funds, and then a list of your assets that the lender can use to as consideration. If things are tight, they're going to be able to look at it and say, oh, okay, well, Vincent's debt to income ratio is very tight, but Vincent has X dollars in his Edward Jones account that he could potentially fall back on if things go south for him or if he loses his job. Those are things that we want to know as lenders, because if things are tight on the front end, then we look to the back end to see if we can make the deal work for you. So for realtors, being aware of the things that lenders are asking for is going to help make that process smooth for your customer or your buyer. 2 years of taxes, any if you have any kind of liquidity that is not in the bank, advise the buyer to go ahead and make those deposits right away. And sometimes you get buyers, I get it, that are like, oh, I can't put this in the bank because if the government knows, then my benefits or whatnot. We don't specialize in that, so we don't advise on that. But I will say that from a lender's perspective, if we can't prove the funds, then we can't give the loans. So there has to be a happy medium. And so we guide the customer through some of those issues. Any other questions, Sherry? Hopefully that answers your question. There's a lot more in depth. All right. So then we move on to what I call the Key Savings Bank products. And these are very specific to Key Savings Bank and what we do at Key Savings. The general products that you learned about a little bit before are where you can go to Summit Credit Union, you can go to Chase, you can go to Bank of America. They'll be available there because those programs are made to be available in most areas. Where you're going to find specialized lending is when you're going to look at smaller community banks who has run those risks for those programs and who have lent on those criterias to individuals fitting those needs, and that we have experienced good returns on those, which means we made the right decisions. Our underwriter understands those risks and we're willing to lend to it. So the first item I'll talk a lot more about is our in-house program, which are portfolio loans. These are for residential loans. They don't have private mortgage insurance because we're not using Fannie Mae, Freddie Mac money. We're not using government money for VAs or USDAs. These are monies that the bank or funds that the bank has, and the bank will lend out their own funds because those interests come back and help the bank. The bank will more than often service those loans, which means that if you got a loan through Key Savings Bank, your loan is staying in Wisconsin Dells, in Wisconsin. And the bank itself is sending you those statements. We haven't sent your loan to some servicing company out of Arizona. So that's usually where I go to when I find a loan that is challenging, that I can't get through to the conventional channels, FHA channels, or because those each have very specific requirements that you must meet, such as USDA or VA loans. I can't get a VA loan because I'm not a veteran. So those have very specific requirements. Jumbo loans are larger loans. These loans generally require 20% down minimum because they tend to be for larger loan amounts than what some of the conventional loans are going to be able to do. So jumbo loans are great if you are purchasing a larger family home, but the more you go, the more the bank is going to ask you to have skin in the game. So if you decide to belly up on it, that you would still have some equity there when they have to resell the home. Some very unique things that we do that you're not going to find everywhere is going to be bank statement loans. Fitted for individuals who have large cash flow, that who does not have a lot of W-2 income, or who have assets that may not be through proper or traditional channels. So bank statement loans allows us to look at a different way to qualify your income versus the traditional W-2s, versus the traditional 1099s that we see on a regular basis. We also look at ITIN loans. ITIN loans, you don't have to have a social security number. ITINs, we can use that. DSCR loans, these are for properties, investments, apartments, condos, and then 1099 loans for underserved self-employed borrowers who are 1099s, freelancers, contractors. You have, I even think realtors are 1099s, right? So those are things that we can use when you don't fit into the standard box. Now, asset qualifier loan, this is something that we use, or I've used a couple of times, is when individuals get divorced and let's say in this situation, the husband and the wife, the husband is the breadwinner, the wife hasn't worked in 20 years, they're divorced, she does not have an income. But through the divorce, she was able to acquire half of her husband's assets, a house, car, a pension, part of the pension, whatever. So we're able to use those assets as collateral to give the loan for the home to, or for the person to purchase a real estate property. And then we do a lot of real estate loans as well, mainly under $10 million is our appetite for real estate. $1 to $2 million is what you generally see, and these are small mom and pop shops. This is a small community bank, so that's usually where those dollars fall in those communities. But in Madison and in the metro areas, we do see larger loans for that reason. And then the last piece is rescue loans. Have a closing pushed back or a lender pull out financing last minute? No, just let us know. Get all the documentation that you have. Get me a copy of the appraisal that was done already. If you have the inspection report, get me a copy of that. And we can turn that around for you. I do know that we have done one of those deals with with realtors in the area, and these are where I specialize in, is knowing how to get these loans approved. And I do specialize in business owner borrowers. jumbo portfolio and commercial lending. And just saving those loans last minute. We want to make sure that if you have a borrower that has been looking for a house for a year and they found one, but something happened last minute and then they don't have financing, but they're on the hook because they have a $10,000 earnest money that will be lost if they can't go through with the home purchase. So we step in and we do what we can through some of the programs that we have to get them into the house. What questions do you guys have? That is the end of it. So I'm very happy that we got through that in like 40 minutes. That was my timeline.
Great job, Vincent. Thank you so much for sharing all your expertise and everything. But yeah,
Absolutely.
does anyone have any questions that they might have? Did you see you saw charity stuff?
Mhm.
No questions?
Feel free to reach out to me individually if you have specific scenarios that you'd like to explore. Or if you're like, hey, I have a friend or somebody that is looking, but um, it seems like we can't get financing done. Let's talk about it because the the standard, and I've seen this in my lifetime too, is some of my colleagues, if you go to them and you're not fitted into the boxes of conventional or FHA, then they go hands up and they're like, it's too hard. I don't want to mess with it. The real deal behind a lender or a realtor is not just to move you into a property. We know that you're going to be stuck with a large payment for a long time. And we know that this is going to be a property that you're going to settle your family into. It has to be the right thing for you. It has to be something that feels good for you. And it's our job. We have a responsibility to make sure that we put you in the right product and we talk through all of the options with you. But most importantly, that we don't give up on you because of one or two hiccups. Yes, Anne Marie, please reach out to me. I'm happy to talk anytime. Pick my brains. I don't charge by the hour. So what I have acquired, what little knowledge I have acquired is going to be available for you if you need, if you have questions. Okay. Well, thank you so much. I appreciate it. I know I talk a lot and this is a webinar, so it's not quite like the good old days where we sit in a room and we all get to meet face to face. I much prefer those workshops. So thank you. Reach out to me. You have my contact. Thank you, Charity. Thank you, Laura. Thank you, Anne Marie, Marilsku, and Gillette. I appreciate you all being here. I love these small groups. If there's anything I could do to help, you have my contact, okay?
Awesome. Thank you so much, Vincent.
Thank you guys. Have a
And
good
everyone
evening.
else, thank you and have a great evening. And thank
Thank you.
you for attending.
Yeah.